going, back to Greek mythology, story of Ulysses and the Sirens, right? In the Odyssey, great adventure, Odyssey spends 10 years trying to get home safely from the Trojan War. Near the beginning of his journey, he sails past the island of the Sirens, who sing, sweetly sailors songs, right? And die listening to the music, right? So Odysseus wants to hear the songs, but he also wants to make it home. So he plucks the ears of his sailors with wax and has them bind him to the mast of their ship, right? As they sail past, he begs his men to set him free. Let me see. But they follow his previous instruction and bind him harder till the beckoning process. So emotions are the siren songs for people worried about retirement, right? Prospect theory is behavioral model developed by Nobel Prize winner Amos Tversky and Daniel Kahneman, a very famous psychologist. It provides that people very often make irrational decisions when faced with choices that involve risk, reward, and uncertainty. Economists and financial planners now more easily recognize that people make predictable mistakes when faced with hard money choices. Fear, common example of prospect theory, right, in action, is a panic selling in the falling stock market. You may have seen this behavior this year. And greed, and it works the other way around too. When markets and home prices are going up, people are likely to make bad decisions and take on too much risk. Ulysses Strategy, 5 ways to control your emotions, to keep a steady course toward your goals. Emotions, for better or worse, are windows through which we see the world. There is no way to get rid of them, and if you did, your life would be pretty gray. But using the Ulysses Strategy, you can tie yourself to the mast, tame the powers of your emotions to get the positive outcome you want and avoid negative consequences for your nest egg. And this is kind of, I made this references very often, the idea of fear of future regret, right? And there was actually interesting discussion, not in this article, but just in general, and Annie Duke was talking about. So you used regret, fear are the most two powerful emotions that humans experience. The point is that usually regret, according to Nietzsche, we push forward, right? There's no reason to use the regret in front of your decision. But what this book talks about is sometimes we can use regret into our advantage, right? We can push the regret in the front of our decision, right? This idea of fear of future regret, get tied to the mast, right? We can tie ourselves to the mast, right? What do? We go through this future rehearsal exercises. We know that if we listen to the songs of sirens, it will cause, negative consequences, right? So how do you tie it to the mast? The way I interpret this, you push the regret in front of your decision, right? That's the Ulysses strategy. You push it in front of your decision-making process, and then you determine, right? You basically say, how will I feel, if the market breaks through 380, right? I'm long, let's say I'm long right now. I think market is gonna go higher, I'm long. So then how will I feel if the market drops below 380, right? I'm pushing the regret into before I make a decision, before I enter the trade, right? I tie myself to the mast. How do I do that? I basically go through that calculation, right? I know that, let's say if I can only, let's say my stop loss is 380 and 33 points, $250, right? Let's just go slowly. Right, if I buy here and I put my stop loss here, I'm risking $30, right? 30-point move. And I know that I cannot risk more than $250. That's my rule, right? That's my rule. Any single trade, I don't want to risk more than $250. So that means I can buy, let's say, 10 shares. Right? So this is how I tied myself to the mass. 10 shares, and I would just buy 5 here shares and 5 here, right? So this is my example, because I know that if I listen to the sirens, right, and I think that the market is going to go higher, let's say I buy, 30 shares, right? I buy 30 shares, right, because I think it's going to go higher. I know in the future, let's say I do, I'm going to wait for 380. I'm going to wait for 2 to 3 days to make sure it's lower. It might actually drop to 375. And now all of a sudden I'm down $1,000, right? And initially I planned $250, and I'm going to lose $1,000. So I know basically I was listening to the sirens, right? I was a Ulysses. I was listening, one of the crew, I was listening to the sirens. I bought 30 shares, and then at some point I know market will break 380. So as long as I'm going to continue to listen to the sirens, I know the ship is going to get wrecked, right? It might not happen today, it might not happen tomorrow, but sometime in the future it will. So that is this is an example. So now I'm down $1,000, right? So I'm pushing regret, right? And this is the way she said this, I was never thinking about this, but and this is actually Nietzsche was talking about this. You push regret before you make a decision, right? Before you make a decision. And this is a very powerful concept in psychology, right? You push it before you make a decision, not after, because after, this is a very powerful emotion that most of us, want to avoid. But if you push the regret forward before you make a decision, you can use it to your advantage, right? You can use it to your advantage, and it's a very common concept in psychology. And there's actually a term, Ulysses Strategy, right? It's not just a story of Ulysses; it's actually a term that psychologists use all the time. Maintain retirement plan, this is just general concept. Create, following a strict plan for investment, right? Don't break your rules. Hire a trusted crew, right? You hired Yellow Tunnel, right? You believe them, you trust them. Alex, welcome. CP, welcome to the live stream. Do me a favor, guys. If you guys can hear me, just type in stream chat hello, or in stream chat hello, and just say hi on the Discord. I assume you guys can hear me and see me. Alex, CP, welcome. So hire a trusted crew, that can help you. We'll say Yellow Tunnel and Tradespoon in this example. Take calculated and rational risk, and think in small bets, right? That don't think in absolute terms. Don't think all in. Just because you dealt 2 aces, that doesn't mean you should go all in, right? Just because it's not 100% certainty you're going to win that hand. Same thing. Just because Vlad said market is going to break through this 420 most likely, that doesn't mean it's going to happen, right? You want to put a well-defined investment with rational risk and calculated risk, right? Very important. Sit with your emotions, right? Before you take any big financial action, sit with your emotions. Ulysses understood what he was feeling and created a plan of action for dealing with his emotion, right? Trading plan. Keep a journal, write a plan of investing or trading before the market opens. As Franklin Roosevelt famously said, the only thing we have to fear is fear itself, nameless, unreasoning, unjustified terror, which paralyzes needed effort to convert retreat into advance. Break down the nameless, unreasoning fear. Alex, thank you. Perfect, thank you. Break down the, and I assume you can see me, right, Alex? I assume you can see me. Break down the nameless, perfect, thanks a lot, great. Break down the nameless, unreasoning fear into its different components. What exactly are you afraid of? Is it a problem that can be addressed today? Or right, so we're all different, we're all wired differently. My fear is of future regret. I paint different pictures than that you guys do. So but that's, everybody's a little bit different, but we all humans, and we all, these are our triggers. Before you pull a trigger on a large potentially damaging decision like liquidating your investment portfolio, taking loan against your 401k, take these 3 steps to slow down your thinking and eliminate choice based on panic, right? Name the emotion, right? Put a name into the emotion, write it down, keep a journal, it will slow down. Feel it. Once you have broken down the components of your feeling to something nameable, Allow yourself to, if the space feels those emotions. Rationalization is this process of denying your emotions. Working through your emotions means acknowledge their sources so you can plan, right? Emotions are good, right? We need emotions, right? You know, we shouldn't hide away from our emotions. We shouldn't deny our emotions. You know, we should work through our emotions and, you know, take positive actions. Listen to the siren songs with never awareness of consequence, right? You turn on CNBC and people say, well, buy Amazon, buy Google, buy Microsoft, their historical lows. These are the siren songs, right? You know, you're listening to money managers, they're never gonna go short, right? They always go long, but these are your siren songs, right? So I'm not saying, you know, don't listen to them, but just awareness of consequences. Listen to the siren songs with the base, you know, it's not realistic that you turn off your TV, close all apps on your phone, stuff your ears with wax for the rest of your life, right? You know, obviously you can't tie yourself to the mess because otherwise you'll never trade. So that's the balance. All right. I don't know if you guys, so I mean, I like that presentation. I like the article. You know, obviously, I think if you never read these guys, you know, emotional intelligence, you know, very powerful psychologists, you know, really good read, Thinking in Bets. All right, so hopefully that was helpful. Meanwhile, you know, QQQ. So let's see. It's meanwhile, any questions on Ulysses contract and little divergence, Sunil? All right, Sunil, thank you. Good morning, Sunil. Osama, thank you. Sure. Global economy, the World Bank released a green forecast for global economy. Yes. Fear of recession, prolonged recession. Thank you, Osama, for sharing. I put forward on follow through. Okay, thank you, Bob. John, thank you. Paste the link, sure. Ulysses, or Thinking in Small, I'll post both. Send it to all. Ted, thank you, Ted. Appreciate it. John from California, your peers trader again. You were John. All right, welcome, John. John back. Okay, thank you for your kind words. All right, now back to reality. My wife doesn't believe in psychology. She says it's all mumbo jumbo. You know, she says, you know, some other terms I'm not going to repeat, but okay. Some people like this, and like me, and some people don't like this, like my wife. So I'm sure we have half and half, but you know, nonetheless, you know, since I'm doing the presentation, I have a choice. But anyway, all right. So let's go back to, this was more of a, trading psychology is important. I believe that's half of the success. You know, if you can't deal with your emotions and you don't know how to, you know, differentiate between, you know, your, you know, the voice of sirens, right? You know, then you're gonna have a shipwreck, right? And you have a lot of these stories, right? Even like the best quantitative hedge funds went bankrupt. They still do. You hear it almost now on, you know, on regular basis. Why? Because there's no trading psychology, right? Because they think, you know, they think that trading is a chess, right? There's a certain number of moves and permutation that will always lead to a successful outcome. And trading is not a chess, right? Trading is more like poker, right? It's a combination of science, statistics, but also luck, you know, and art,